morning, everybody. Happy Friday. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. I've got Steve Strazza here and the return of the man, JC Parets. He's back as well. We got a lot to talk about. Very full show today, okay? We have Kenny Glick joining us in about 20 minutes. We'll have Kimmy after that. But we got some earnings. We got some after-hours movers to discuss. And we have like 3 days to catch up on JC's charts. JC's backed up in charts. He needs to get them all out now. So we got a lot to get to. So let's go right into it. If you're watching us on YouTube, hit that like button. Please and thank you. Let's go. Everyone's
Gentlemen.
We all back?
Friday.
Happy
Yeah,
Friday.
we're back.
Good morning. So,
I got to tell you, I love Chicago. Can I just tell you, the fact that Strazza's never been to Chicago is absurd. Good town, man. Great town.
JC goes, he has a great time out in Chicago, comes in the Slack to tell everybody about it, and the next thing out of his mouth is Strazza's never been there.
I find that to be ridiculous. The fact that you,
Why?
of all... I don't know. I figured
it's a nice
you'd
town.
really like Chicago.
So I actually gave it some thought after we talked about it in Slack, and I think I've only spent one night my whole life in the Midwest at all, in Kansas City. But I've never even been to these states. So yeah, I got to go. It's on my list for sure.
It's clean, man. I was really noticing yesterday, a couple days
where
ago.
where you were, it was clean, maybe. Yeah.
Right. Where I go, I hang out in the nice parts. Right. I mean, it's just the city burnt down, so they rebuilt it. They did it the right way, so it's not like you don't have those New York City kind of just trash on the street kind of stuff. Not hating on New York. I love New York. I like New York better than Chicago, but that's not the point. Really clean, right by the river. A lot of restaurants, bars, people walking around. A lot of people smoking weed. It smells like green everywhere. I think it might be recreational now, so all the parks
it's still novel. It's still pretty new there. So yeah.
You don't have homeless people smoking blunts. You have nice people in work clothes, just ripping a J down the. It was kind of funny just to observe.
Yeah. Where did you eat? Good question, Curtis.
I had lunch at a small diner, forgot the name, and then at dinner we ate at Siri's. We ate at the bar. Show the picture of me and Mary.
You didn't let Mary.
I showed it yesterday. Yeah.
You didn't let Mary take you out for some deep dish.
First of all, Mary is a small town gal. Fish out of water in the city.
What?
She's she gets nervous driving around. She dropped me off at my hotel afterwards.
Oh.
She's not a city girl, so it was a little bit of an adventure for her too, which is fun, right?
That's awesome.
Okay.
Yeah, these drinks, it's serious, man. I know we always talk about it, and it's a joke.
Yeah,
but
Mary told us she was.
I haven't been in 5 years, and so it was fascinating. It was fascinating, watching the bartenders. You ask for a vodka and tonic, one of the guys was, and it's just a vodka, and then there's a little,
It's like a splash. Sean was telling me.
That's right.
All right. So how'd the presentation go?
For some reason, my
hour and a half.
Give me 1 second, guys. Give me 1 second.
Yeah.
Okay.
So you gave an hour and a half presentation out there.
Yeah, I heard it went well. No,
I've done 2 hours. Did 2 hours at the Money Show.
That's a lot of talking. That's a lot of talking, man. That's a lot of charts too, because some charts you spend 10 seconds on, so that's could be a lot.
I think I must have had 300 charts.
That's a lot. Are you all good now?
Yeah, we're good. Presentation went well, man. 186 charts, new record.
What'd you talk about? What did you tell them was the most important chart right now?
I said 3 times. I stopped the presentation. I said, this is the most important chart.
You said it on financials. And then you said it on the Q's Russell 3000.
Yeah, you know me pretty damn well. Yeah, I think that's exactly right. I think it was the Q's Russell 3000 chart, right? Mega caps dominating.
Yep.
The small caps and financials We'll talk about it now in the state of the markets.
Yep.
And the dollar.
I'm with you. I was
already talking about the dollar being the most important chart before I even got to that part of the presentation. I just couldn't help myself.
3 of you guys all wrote posts about the dollar the other day. That's good information.
Independent of each other, by the way.
Yeah.
Listen, it's a big deal, man. It's a really big deal. There's, anybody who's tried to fight these negative correlations between the dollar and equities is lost. And I've had a front row seat to this for years now. Like everybody's like, oh, but the late 90s wasn't like that. It's like, yeah, bro, but it's like that now, which is really all that matters. Shall we?
The late 90s.
Yeah, Let's shall.
Well, why don't we bring up what I think is one of the most important trends here, especially from a risk management standpoint? I think a lot of us are in the camp that there's at least on our team, there's a higher likelihood that we get a year-end rally than us not getting that. However, I always like to play devil's advocate, and what's the market going to look like? What does the market have to do to sort of suggest that that's not what's going to happen? And I think it's financials and the Russell 2000 breaking down to new lows. If that's happening, we're probably not getting a year-end rally. It's probably not happening. This is it right here. You're looking at the 2018 highs. You're looking at the 2020 highs pre-COVID. Both of these, they're trading the same. Look at the next chart so you can see here in the short term, they're really trading the same. And I want to open this up to Strazza. These are companies where they're interest rate sensitive, right? And interest rates ripping puts put pressure on these stocks, right? Small caps are broke, so they need to always be borrowing money. And then financials have a lot of exposure to that duration risk, right? So there's an element of that. So that's why they're trading together. Do I have that right?
Yeah, absolutely. And it seems like, well, at least for financials, commercial real estate is now creeping into the equation as another big risk. But anyway, higher rates. Would you say that historically in rising rate environments, you don't favor small caps? Because sometimes you get like it's risk on, small over large, right?
Not always, though.
No?
It's not consistent.
I know it's not, but that's the narrative sometimes, is that small caps outperforming is...
Listen, we sometimes look at it that way. I talk to really smart people that present it that way.
Yeah, I know.
I'd rather kind of stay away from that. We haven't seen it. We've seen small caps outperforming large caps in very strong environments.
Yeah.
We've seen small caps outperforming large caps in very weak environments. I don't think it's that reliable. I think it's on a case-by-case basis. At this point, it's more like just because we have narrower leadership than maybe we've seen in the past doesn't mean there's widespread distribution. These are two different things. Narrow leadership is one thing. There's nothing wrong with that. That's okay. It's the widespread distribution part that's the problem, which we haven't seen. But if small caps and financials start to break down to new lows, that would argue towards wider distribution. Am I wrong?
No, yeah, I'm totally with you. It's a good point. The worst stocks are holding up okay.
Yeah, what about the Russell 3000? What about the micro caps? Throw that one up there.
You see what I was saying yesterday? I don't like seeing it get rejected after testing 100 from below here. 2 nasty candles the last 2 days too, if you were to zoom in there.
Well, yesterday was even nastier.
That's what I'm saying. Yesterday's candle was gross.
These are new closing lows, by the way.
That's right. So this would be the lowest.
Remember, these are the worst stocks these are the worst stocks, worst companies in the world. So there's nothing wrong with the worst stocks and the worst companies in the world acting the worst, right? Just to be fair, that makes sense to me. The question is, are these micro caps a leading indicator for small caps? And we just looked at the correlation between small caps and financials. Are they going to be leading those lower as well? That's really the question here.
That's absolutely the question. And then the next question would become, oh boy, does the Russell 2000 financials violate these major levels that are going to come into play if that's the case?
Yeah. So that's what we're watching. quick rundown of the markets here. The bond futures, and I know this is a little early, but the reason I'm doing that, bond futures are up almost 2% on 30s. And boy, does gold and silver like that. Holy cow. Rates absolutely ripping, has put downside pressure on precious metals. Now that you're getting, at least today, you're getting a reversal in those bonds. Man, silver's up 3.6%, gold's up 2.25%, copper's flat, oil's up almost 5% this morning, with the dollar inching lower. That's a big deal, guys. That's a big deal.
It was like some Russian news, this oil thing, I believe. Let me see.
Russian news.
Yeah.
I got a good chart. I want to show, speaking of the dollar, here, let me, where is this?
Hey, how about where crude oil bounced, though?
Like it's in that range. What do you mean? You think there's a special place where that bounced?
Yeah, the Q1 highs and April highs.
Go to slide 1 here, and then we'll look at slide 2. This is the dollar. This is a big deal, So I just want to reiterate, people, the JC, the dollar index is just the euro. And that is true. The dollar index, quote unquote, is a lot of euro. It's like 60% almost euro. But when you eliminate, when you take out that euro dominance and you look at the rest of the G10s, it looks just like the dollar index. So I think it's important to reiterate that while the dollar index is a lot of euro, the dollar is not just euro. There's a lot more going on there, right? I think
that's right.
Right now.
Yep. Hey, if you had to pick one pair to analyze for information about where the dollar's going, though, you're going to pick the euro every day.
Nope.
Yeah, you are. Yeah, you are.
Nope. What am I picking? You know what I'm picking.
No, I don't. Why don't?
I'm picking that Wisdom Tree ETF, son.
Oh, I said one pair, one currency.
Oh, yeah, got it. All right, you got me.
So you're talking about CEW. Shout out
to our friends at Wisdom Tree. Can you throw up slide 1 there, Mr. Israel? There you go. So it doesn't include yesterday's action. You had a big stick yesterday in the dollar. Big stick.
Yeah.
How'd you feel about that?
Again, we've been talking so much about these bullish engulfings. I don't know if this was technically a bullish engulfing. Got to zoom in here.
Technically was not, but that's not the point. It was a big stick.
No, it was the way I'm seeing it, because you had that tiny doji the day before.
It was a big stick. It's not, it's not the point.
The point is, look at
the candlestick police here going to tell us we're wrong.
It's a bull engulfing.
No.
Listen, the point is, no what?
No, I was talking to JC. I wanted to ask Strazza the question in the chat that Mike is asking you.
Yeah, hold on.
Okay.
First, I see it. The point about these monster candlesticks that we're getting is just like last Friday. Look at where it's happening in the dollar. A key level. That's where buyers are stepping in at these former highs, right? Because there's price memory there. And there's just such an overwhelming amount of demand that you get this monster candlestick. That's what we were talking about last week with the cybersecurity ETFs and all these other tech and growth indexes, right? Same thing. They were at key levels. It was like decision point time, and you get these monster candles, buyers coming out. So it's not encouraging for risk assets to see the dollar behave that way on a retest of former resistance, right?
Can you, Spencer, before we got the show started, we were talking backstage in the old green room, and you were telling me that Jamie Dimon is coming in hot this morning. Can you tell me what's going on there? Tell the folks out there what's getting you all excited about.
Jamie Dimon from the top rope this morning. He knows what he's doing. All right, you want to do some? We'll do some earnings real fast, and then we'll bring on Kenny. And then we'll bring on Kenny. Let's go. All right, it's the most wonderful time of the year. It's earnings season, the last earnings season of the year. We got banks this morning: JPM, Citi, Wells Fargo, PNC, and BlackRock all reporting. They all pretty much came in above estimates. They all usually do. But I want to highlight this comment, and let's bring up the JPM chart if we can. From Jamie Dimon, he talks a lot about their business, yada yada yada, a lot of normal stuff, and then saves this nugget for the end. And he's no dummy. He knows what people are going to latch onto today, and it's this. This may be the most dangerous time the world has seen in decades. While we hope for the best, we prepare the firm for a broad range of outcomes so we can consistently deliver for clients, yada, 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 yada. So he spends a lot of time talking about how good the quarter was, how good their business is, quantitative this, Fed that, and then he throws that little nugget in there. Yeah, this may be the worst time in decades, but you can say that anytime. So it also may not be the worst time in decades.
Is Jamie Dimon, with all of his bearish comments all the time? And to be fair, he's like, he also makes very bullish comments also, right? And that's why people listen to him. But doesn't he have a stake in maybe the government or other regulatory bodies thinking things are worse than they are? Maybe.
Yeah. So
right?
here,
for example, if the Fed, God forbid, were to listen to something Jamie Dimon said, might they take his comments on, oh, maybe we've done enough, maybe we shouldn't keep hiking rates? And wouldn't that benefit JP Morgan's business?
Yeah, maybe I should have started with the first sentence of this paragraph, which is currently U.S. consumers and businesses generally remain healthy, although consumers are spending down their excess cash buffers. So, like what he'll do is he'll say like 9 like somewhat positive to neutral things, and then one really negative thing, right? and that one negative thing is the one thing that everyone will latch onto, right?
Do you know what the context is for this? I have the article up now, Wall Street Journal article. In what context was he saying that? I'm assuming he's talking about the rate environment and what that means for the financial system.
No, he's talking about, so the sentence before was, furthermore, the war in Ukraine compounded by last week's attacks in Israel may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. So it's the geopolitical stuff is what he's talking about.
I have some smart friends down here who formerly worked in finance, and I was having a conversation with them yesterday. I didn't even know what to say. It was just dark, like the end of times kind of stuff.
You zoom out. Go look at slide 1. I think it's important. Zoom out to slide 1.
Anyway,
because I think this really puts things in perspective. His comments. Let's remember. This is JP Morgan stock going back, a few decades. It goes from the lower left to the upper right. Here's another one that I think is interesting. Go to the next chart. This one's pretty fascinating, Strazza. Next chart.
What's this?
Another big one.
Chart 2.
Good.
What do you think, Strazza? Look at that. So this is a chart of JP Morgan relative to the S&P 500.
Let me hide my eyes.
No, but let's remember what this means. That means that JP Morgan trades at the market.
Yes, I know.
That's what this means. It's not right. Like, we're not buying this chart. That's not the point. The point is here to show that this is a mess. This is a squiggly mess because they move together.
This tells you literally JP Morgan is the market. It's an index. You're buying an index.
Don't we treat it that way, though? We treat it that way here. Yeah, we look at JP Morgan as a bellwether.
Just gonna
always have.
Yep, absolutely. No, and it's not a bad thing, but it's not a good thing either.
What's not good about it?
There's no alpha here.
Oh, fine, but but that's why it's a bellwether.
Right. Know what you own.
Yeah, know what it is. Understand. Yeah. If you're buying JP Morgan, you're long the market. You know what I'm saying? If you're right, it's pretty much what it is. And there's nothing wrong with that. That's fine.
No, and here's the thing.
Biggest bank, what is it? 450 billion, something ridiculous.
Some people simply want like financial exposure to the US financial system in their portfolios. And that makes plenty of sense because this was the hottest sector we knew just a few decades ago, right before tech blew up. But you don't want to own just anything. JP Morgan, I think, makes that easy for a lot of people. It's a recognizable name. It's a big brand. It's by far the biggest financial in the US. And they're up like 10% year to date. The banking indexes are like down 10%. And that's not just unique to this year. Like, we see this over and over and over again.
Think about the crap that's in those bank indexes.
Right, but don't we see this all the time? Oh, banks are under pressure, but JP Morgan's okay. Banks are tanking. Oh, JP Morgan looks the best.
Aren't you the one that's been making the argument that JP Morgan is benefiting from all these little shitty banks blowing up?
I think
because aren't they getting all the assets for like free of cost or getting their customer acquisition cost is like a joke? Am I wrong? Didn't you tell me that?
They bought assets for like pennies on the dollar from one of the banks.
And by assets, you mean customers, right?
Yeah, they buy the loan book, right? and the deposit book. So, and what they were doing too, the government back during March and May, as this was happening, the government was basically saying, we'll take the bad assets, or we'll insure you against losses on the bad assets if you have losses on them, right? But just take the deposit book. So like these deals were amazing.
Strazza, it's almost like they've done this before.
They have. But
almost.
It is important, and I think he was complaining about it. I saw some headlines today. He's been complaining about it. They're going to raise capital requirements across the board.
Oh, Crimea River, man.
No, it's stupid. It's just unintelligent, right? Because the big 6 banks don't need that. In fact, they need not that, because they need to be able to use their money to make more money because they're struggling. And they're the 6 biggest financial institutions in the United States. We don't want them to struggle. Right. So you don't want to raise capital requirements on them because they don't need that. You should make a more tailored solution for the regionals and the problem areas in the banks.
They got too many. There's too many banks. We need more of them to blow up. I'm surprised that more haven't.
Another thing too, just going through his comments, I think it's coming, JC. I think it's
more banks are blowing up. Unemployment's finally going to go up. Unemployment's too low. Like, these things need to happen.
Well,
is it a need? Is it a need? Is that
no? I think you were spot on back in March and May when you were being very obnoxious about how unimportant this was to the broader market, right?
Because I was on TV and Liz Clayman is like, oh, JC, First Republic is blowing up. What do you think? I'm like, I'm pretty sure this is like $1 billion bank. Like, who cares? Like, Microsoft was up $150 billion that morning. And here we're sitting here wasting our time talking about this stupid bank no one's ever heard of. Like, who cares? So I said that, and as it turns out, nobody actually did care. It was just a media frenzy.
And I think that'll be the case again this time around, if and when they come. And so I was thinking about it yesterday. I was overthinking it. You know how it's going to happen, and when it's going to happen? Now. Think about it. Silicon Valley. What caused that bank run? Do you guys remember?
VCs on Twitter?
Yeah, actually, VCs on Twitter.
What caused the VCs on Twitter to say something?
That they were all getting screwed. All their portfolio companies are getting.
Oh my god! I'm trying to remember. What was it?
It was a surprise 8K filing saying, "Hey, we need to raise capital, but it's cool."
Oh, that's right. And
they thought everything would be just fine. They'd already secured, like it's going to be good.
Yeah.
Saw that, reacted to it, went back, looked at their prior quarter financials. Then all of a sudden, oh my gosh, things are on Twitter. The bank run ensued. What's going to happen now, this time around? We don't know the numbers. They're not marking these things, right? So they're going to come out. There's going to be commentary. They're going to reveal their losses. Panic will ensue. Bank run. But it's going to be the earnings reports that probably push it over. So I think we'll know soon.
I don't know. These banks are all really good at hiding stuff in their reports. So
you can only hide it for so long, though. Eventually,
that's true. It's true.
Money.
And there's like 3 people out there in the world who understand that. I can figure it out. Also,
it's also true.
Spread the word.
Also true. Anyway, all the banks are trading up this morning except for BlackRock because no surprise there. They said that when you can earn interest on your money market funds, it makes it harder it disincentivizes people to put their money in the market, and that's BlackRock's game. So that's what they said this morning, and that's why BlackRock is down.
Hey, also just a great comment in the chat here, because JC was talking about how JP Morgan's probably the biggest winner from all of this. Bank loans are going to private credit. Private equity, all these private financial institutions are killing it right now. They're getting all the business. That is
providing liquidity to Silicon Valley.
Because the private companies know where all the bodies are buried. One of my good buddies back in the day, he was one of the analysts on the desk that were selling all these garbage, like collateralized mortgage right? All of those things. They were the ones selling it to these institutions. Yep. So when everything was blowing up, they had a list of all the institutions that owned this crap because they're the ones that sold it to them. Yep. So now they're at a new company that is now buying them for 20 cents on the dollar with already a buyer. And the spreads they were selling for 40, 50 cents on the dollar. So they were making 25, 40, 30 cent rips because they know where all the bodies are buried. It was fascinating.
All right. We've been keeping Kenny waiting. Can I bring Kenny on? And we've been keeping waiting for too long. Okay. Kenny Glick, everyone.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Kenny Glick in the house. What's
up, man? What's going on, boys? I heard it's the most wonderful time of the year. I love Christmas music. Let's go.
Oh man, this Mariah Carey, man, it really gets my mojo going in the morning, right?
I'm still a Dean Martin, Sinatra, Bing Crosby guy, but okay.
All right. I'm
Yeah,
more of a
Bruce
grandma got run
Springsteen
over
guy.
by a reindeer, right?
yeah, that's always a good one.
Yeah,
What's
yeah,
going
yeah.
on?
So raging bull market, buy everything?
No, I heard you guys talking, and I'm kind of like in the Jamie Dimon camp. I'm a perma bear. Obviously, you know I'm the ex-president of the perma bear organization. But here's how to do it, my friends. I'm so super bearish. Everything's going to hell. Oh look, the Qs are breaking VWAP. Buy them, and that's how you trade. So again, I trade what I see. I'm super bearish. Again, I'm very tied to the global events that's going on right now. Everybody knows what's going on, and again, it's a scary time. And normally you don't run towards equities, but you do run towards equities because
I was going to say, yes, wartime is great for stocks.
wartime is great, right? Exactly. It still doesn't gel in my mind because I'm genuinely afraid for society. And here we are buying stocks. But it is what it is. That's exactly the nature of the game. And when things are, uncertain and the market's telling you that it's not as bad as you think, get involved. And just like this morning, I suspend my disbelief and the Qs are rocking. I'm joining in.
Can you let's rewind a second. You said Qs are breaking VWAP by them. Explain to the folks what that means.
Well, generally, I trade one line in the morning. I'm looking at the VWAP that starts to form at 4 o'clock in the morning. Once volume starts coming, that's why I'm looking at JP Morgan.
And this is QQQ pre-market or futures?
QQQ pre-market right here at around, I'm in from 826. So they got over the VWAP. We have this little consolidation pattern underneath it. If you guys are following, if you guys show my charts, I could. I mean, if you guys want to grab my charts, but again, it's easy to describe. As soon as they get over the VWAP and then over the high water mark for the pre-market, I'm in because that's how you identify risk. If I'm wrong buying them at 369, my risk is sitting there at 368.70. And if you could trade a $300 stock with 30 cents of risk, I'm in. It doesn't matter if it works or not.
And then what do you do?
You
set a stop right below the VWAP? Is that what you're doing?
Yeah, I'm buying 368 on 369. The stop is right at 3. I use 3 stops. I use the VWAP as a stop and the bottom of the channel that forms. So 368.35 area. And then if you go back to really way back to around 642 this morning, that's my second stop, which is another whole number at 368. So clearly defined, and then the market starts to rally. We have prior day VWAP is up at 370.83. That's our target. But again, as every trader knows, once you have money in your hand, start taking some money. I sold already at 370, and now I'm milking the trade. So I raised the stops from way down there at 368. My stop's at 370 now, and I'll hold the Qs long as they don't break 370 going into the open, because when the open starts, I'm going to go right back to looking at the banks and FAZ and FAS to see if they stay strong.
So you're using the VWAP from the 4 o'clock a.m. morning.
Yeah.
And then you're also looking at the continuation from yesterday's VWAP.
Exactly.
So on Monday, you'll look at today's VWAP and then Monday's VWAP.
Right. And if we start to trend a little bit more, I start looking at more than 1 or 2 days. And then I'm always looking at the longer term charts also. This year was an amazing year to be looking at 3-year VWAP charts. I don't know what it was. I found a couple of beautiful trades like Carvana coming out of the bottom and AAOI and a couple of weird stocks. And I just started looking at 3-year charts, and they were all coming out of these bottom formations. And that's what I stuck with. And so I looked longer term, but then I kept it shorter term when I put the day trade on.
Kenny, are these 1-minute charts?
Yep. Yeah, generally 1-minute charts. I'll once the noise starts in the beginning of the day, I'll start switching to 5-minute charts just to keep myself in the trade. But again, I'm looking for I just try and look for the fade. So when I see the banks all gapped up today, I'm just sitting there going, okay, let's short something. But I'm not going to short them until they start to roll over and I can identify my risk. I'm not going to get in their way. And again, that's what I've learned being a perma bear. You can't get in the way of a market that generally wants to go up. Most stocks kind of stink. We've seen the special. I don't know if you guys caught that on CNBC. Somebody was talking about overall over the last 100 years, most stocks do stink, but the markets kind of perpetuate the upward move. So again, I'm not getting in the way of this market. And I trade the QQQ. These weekly options, these daily options have been phenomenal. I mean, people are saying they've kind of ruined the market. No, they've made everything awesome. And be able to trade the Qs for pennies on the dollar every single day. When you know what you're looking for and know what to do, these are a godsend.
I know, but why would anybody think that it ruins the market by adding liquidity?
I don't know. I read how it's ruining the market. It's somebody said it's adding volatility. It's taking away volatility. People are just very negative. I've only seen negative things written about them.
I think it's just people are scared of new things.
Exactly. Yeah. It's that, and they're afraid that it'll like distort like the normal like price action, right?
Oh, because price action is always so normal.
Yeah. But it's a fantastic way to trade. Again, if you didn't trade the QQQ, you only had the TQQ, which is like the mini leverage version. Now you can trade options. Like I said, pennies on the dollar. It's phenomenal. And when you get it wrong, it's 100% loss. But when you get it right, it's usually 3 to 5 or 10 times your money, and that's on a daily basis.
And then, Kenny, let me talk about what you were just saying before about how most companies and most stocks do suck over time. I think 70% of stocks go to zero. Something I heard recently. Whatever it is, it doesn't matter, because the way that these indexes like the S&P and the NASDAQ are constructed is that they buy more of the best ones and less or none of the worst ones.
Right. And
so
if you're like,
those shitty stocks are not your problem.
Yeah, you kick them out of the club. Bait it.
Right. That's what I was going to say. Or what they do is they just kick them out of the index, right? And they probably right.
It's the weak lamb at the back getting eaten by the lions. All right.
That's exactly right.
That's why Westinghouse and Zenith aren't in the Dow Jones anymore, or Bethlehem Steel.
Listen, RCA was a hell of a tech stock back in the day. No mas. No mas.
I still got my Zenith. I got to hit the side of the TV to get the.
Hey, I grew up on Zenith. All right, Kenny, got any? I can always count on you like a good junky stock. You got any good junk for us today?
Oh, TPST. I almost lost my house trying to short this thing.
Can we keep the market caps respectable?
Yeah, I'm trading penny stocks, JC. I'm in TPST.
And about that.
How about Seco? Seco out of nowhere. We're kind of joking around.
What's the ticker?
SECO. But TPST is still in play. That's why I'm digging it.
$7 million stock. We can't talk about this.
Seco, this stock went, I think it was 17 cents.
I don't care.
No. I guess when I said junkie, I meant like Carvana. That's what I meant.
Remember who you're talking to here, junkie.
Oh, you want
Carvana's a blue chip for this guy.
Yeah, that's true. You know what? What's the most junky one I've been trading that's been really good? The ENVX caught a bottom. That's a junky stock that I've been back. I'm back in now under 10.
There we go. $1.6 billion market cap. Trade 6 million shares. See, now we're talking.
Yeah, I mean it's a nice buy down here. I bought that one. Rivian on the collapse.
Now we're talking. Yeah,
I kind of dig it under 20.
This is what Spencer was asking for.
Yeah, and I
respectable junky stocks.
Yeah, I've been actually sniffing around the VFS down here. That's 750. Remember this one? $9 to 90, back to 750. I don't even know if they make cars. It doesn't matter, but
it doesn't matter.
Yeah,
it doesn't matter.
Yeah, it doesn't
matter.
Wow.
They're going to make cars. They just don't do it yet.
Their plan is to make cars.
Yeah. Right. But normally all this junk, I got most of those Carvana trades coming out of those 3-year charts. And again, most of those stocks have come back down to earth. I trade IonQ almost all the time. Stock is just a nice little cheap stock that moves. And again, we're day traders. I don't invest in any of this stuff. The only investment I have right now is Rambus, baby.
I know.
20-year breakout.
Why is it your Rambus?
It's my Rambus because everybody thinks it's my Rambus. It's not. It's my Rambus when it's going up. It's your Rambus when it's going down.
I like that. I actually do like that a lot, actually. Can you throw up slide 1 here, Spencer?
That Rambus chart is that monthly.
I just want to zoom out because I know we're talking a lot about like this morning, 30 cents here, 40 cents there. Let's zoom out just to give some people some perspective.
I'm looking
on
for
the old
25-year highs. 25-year highs. This thing breaks back into the 70s. You're going to 87. And if you get back into the 80s on Rambus, welcome to the new NVIDIA. If you guys don't remember Rambus, this is the company that powered everything for the internet generation.
This was NVIDIA before NVIDIA.
Yeah, and then it crashed. You came out of basically a 15-year slumber, and you're really rocking. And any consolidation above 48, I'm bullish. I'm in from 48 and 57, and I'm buying leaps. I'm in the $75 calls for 2 Januaries, like 800 days away from now.
Because you're looking for a new all-time. You're looking for a retest of those 2000 highs.
I'm looking for 127. And if this thing breaks 127, I know this might sound nuts, but I think the stock's going to 250 in the next 5 or 6 years. And I don't invest. This is one of my investments. I got Palantir, Rambus, and Rig. Am I diversified?
All right. Do you have any more stock market questions for Kenny? Because I have a more important question.
No, I'm okay.
Is it about the Jets?
Why on earth would I give a shit about the stinking, disgusting Jets? Jets, just end the season.
They're beating the Eagles this weekend. That's why.
Okay.
Never been done. Never been done.
That's right. They're due.
Right. Can you tell me, Kenny? So Kenny grew up in New York, technically,
Brooklyn.
Right? Lives in New Jersey, right?
Yep.
And then there's Manhattan, of course. So where's the best pizza? In New Jersey, Manhattan, or on the island?
You know what? I'm very surprised. We've got, you guys all know Spumoni Gardens, L&B.
Love it. One of my favorites.
We got a place out here. They call it the Flip Flop. It's a red slice, and the sauce is just a little bit more sweeter. I got to say, I like it better than L&B.
Wow.
But still, Brooklyn pizza, for me, growing up, you couldn't find a bad pizza place, you know. So
hold on, you didn't grow up all the way down there by L&B's. You grew up further up, no?
I was on by the water, Sheepshead Bay. Yeah, Sheepshead Bay, Mill Basin. Yeah, we didn't have much good pizza by Mill Basin, but Sheepshead Bay, we had plenty of places. You had Nostrand Avenue and Flatbush Avenue. Pizza was everywhere. I mean, you couldn't go wrong. You know, once you go to Florida, then you know what bad pizza tastes like. So,
then go to California, bro.
Oh, the worst.
Shit, is
the
it
worst.
bad?
But I would pick. I love this place right down the block from me. They have a Flip Flop. They make a good chicken roll. I mean, that's all you need.
It's called Flip Flops.
Flip Flops, yeah.
And where is it?
It's Cucina Alessi, right by Wegmans on Route 9. Very strange.
In Freehold.
And yeah, I'm in. Well, it's the Freehold. It's the Freehold Marlboro border. Every time I eat one, I'm still surprised. 20 years later, I'm like, I can't believe how good this pizza is. Yeah.
And can we talk about how great Wegmans is too?
Oh, I love Wegmans.
I'm moving near Wegmans in like a month. I'm so excited.
Congratulations. It's a huge win. Huge win.
Nice.
When you move in, let me know. I'll tell you how to do it right. I got you.
All right.
Yeah, man.
Dude, they're Bronzino. Oh, it's idiot proof how to make it. It's fantastic. Great spot.
We got a lot of good recipes around here. I'm going for some oysters tonight at Cousins. Great place. Get the oysters, get the halibut. Yeah, good times. And then it becomes a cougar hangout later.
Okay. All right. Kenny Glick, always a pleasure, man. Thanks a lot.
Love you, Kenny.
See you guys. Good luck today.
Right.
Thank you.
Go Qs.
Go get him.
Go Qs and go Jets, I think is what he was saying there. All right. 909.
Kenny was very depressed. I spoke to him the other day after the Jets got blown out, and he was just like, I didn't even call him to talk about football. He's like, oh, the Jets.
Yeah, man. Yeah, it's pretty bad out there. Not any worse than the Giants, but it's bad. So, okay, can we just rip through a couple? Because we have a few of these bank charts. We did JP Morgan, but can we just rip through the other ones here? So we got Wells, we got Citi, we got BlackRock, we got PNC. I think those are the ones that we have.
Can we talk about the numbers, because the reports, at least,
the numbers were all good.
If you're judging a book by its cover, they look great.
What numbers? What numbers are you talking about?
It's the top and bottom line, the headline.
Headline. Who reported?
Wells, JP Morgan, Citi, PNC.
Oh, they all reported today?
Yeah.
Oh, that must have been fun.
Welcome back.
Dude, I don't know, man. I'm not, I stay away from stocks that are reporting earnings because you and Sean tell me that they're reporting earnings and we avoid them. But I'm not in any of these names, so I really don't care.
Oh, here's the thing. If you did, right, we discussed this possible trade setup in Bank of America the other day. It would have worked great. And now out here, they're going to be getting a sympathy bid today. So up 2% pre-market too.
Yes.
This thing, Wells Fargo. I use Wells Fargo. Great customer service. I got no problems with them, but the stock sucks. I mean, of the big ones, this is the worst one, or Citigroup?
No,
is Citigroup still considered one of the big ones?
Citi's probably the worst, but it's close. It's both of them. They're both very bad. I would, if you're looking for a trading opportunity, Citi and Bank of America are pretty clean.
I like the bank. Hold on, Bank of America reported today, because that is one that I like.
No, they did not.
Oh.
They are on Tuesday.
Dude, I really like this Bank of America. I really do. Said no one ever.
You have the chart?
Yeah, we do. Here.
I mean, you should like Citi for the same reasons, though.
No, here's why I like B of A. I don't own it because you guys scared me with the earnings coming up.
You could have
Here, go
owned it.
slide 1 there.
You could trade something like that into earnings. The stocks are going to move a couple percent in either direction.
You're probably right. You know that? You're probably right. Do I need that aggravation in my life? And honestly, I hate to say it, Strazza is right. Citigroup is kind of set up the exact same way.
Yeah, very tradable here, right? If you're looking for a cutesy little, I want to buy the lows in the banks, go for it. Citi and Bank of America are giving you some pretty nice levels to trade against.
Yeah, you're not wrong, Strazza. You're really not wrong. But the fact that Citigroup,
hey, Citi's been better than Bank of America.
And Citigroup reported today.
Yep.
And very good numbers. Like they beat by like a quarter. I think that their EPS came in like 150 versus like 125 estimate. So again, a lot going on there. They have like 6 or 7 different revenue centers, these companies.
Go up slide 1, Spencer. Really set up the same way, man.
The other thing too about these monster companies, and we've talked about this on here before with tech, and it's probably a lot easier in tech, but when you're that big, right, there's other options into growing your bottom line, at least. Your business doesn't have to grow. You can usually cut. And you saw the technology companies absolutely shedding employees over the past few years. These giant financial firms can do that too. And Citi cut costs to get that big of a beat on the bottom line. But that's not a bad thing that they're able to do that. That's a good thing. It speaks to their financial flexibility.
Are we getting new all-time highs before the end of the year in the S&P 500?
You know, I think we need to start putting the EPS and sales numbers on the charts when we talk about these earnings.
Yeah, we usually do.
Getting these headline numbers up here with a graphic.
Why? Who cares?
No, it's important. People want to know.
Who's important?
We usually do. Didn't do it today, but we usually do. So
well, what does it matter? Isn't the reaction that matters?
People want to know.
Whose people? What people?
The people watching the show.
Bullshit. They know better.
Want to know.
The people watching this show is smart money, and they don't know. They know it don't matter.
All right, time for a good old-fashioned survey.
Time for a survey. But all right, so the big takeaway here is that all the big guys beat. Can you read out the PNC numbers?
Not BlackRock, I think. But
I don't care about BlackRock.
You don't care about BlackRock? Okay. Yeah, I'll read you the numbers. PNC, sure. I'll read you those numbers if you want. PNC earned EPS on a GAAP basis. Yeah, big beat. $3.60 versus a $3.10 estimate. Sales, just a slight miss, but bottom line always matters more than top line. So sales, $5.23 versus $5.32 billion. Net interest income for PNC down 2% year over year. Average deposits down 3.8% year over year. What else do I have? That's it for PNC.
So those are the big numbers. You want to watch the deposit growth, or in this case, shrinkage, and then it's all about the net interest margin, right? And the lending businesses.
Hold on, these banks are doing are shrinkage too? They're stealing money from the banks?
No, they're losing. They're losing deposits. But think about it, right? People are moving into money market vehicles, treasuries, other yield vehicles, and taking the money out of the banks. So,
yeah. All right, that's pretty much it from the earnings front. We did have Progressive, which is up very nice this morning. PGR, and we also had United Healthcare report. PGR's numbers, EPS beat, sales missed, and I didn't even look at UNH yet. But it doesn't usually move too much on earnings. It's high price stock. So UNH beat and a guidance in line. So okay. Oh no, that's a raise. That's a raise. Excuse me. That's a raise. Anyway, there's the UNH chart.
What? So what's the stock doing?
I didn't even look at it this morning because I don't usually look at UNH just because it's so stodgy. But it's up. All right, it's up $7. So $520 stock. It's a little bit, but
I wonder how Ozempic is hitting the bank earnings. That's hilarious.
Oh, we do have an Ozempic headline today.
Can't believe it.
Novo Nordisk. They're raising their guidance. They're raising their sales outlook for the year, and their sales growth outlook for the year, and their profit growth outlook for the year, due to heavier volumes. It's funny, of Ozempic and Wegovy. Is it Wegovy? Wegovy? I'm not sure how you pronounce it, but Wegovy sales. So
every day
with this drug. It's a super drug.
I told you. No, you could go find magazine covers right now hailing it as a miracle drug. That's everywhere.
That's true. That's true. All right. Let's bring on Kimmy.
Under. Hold on.
What?
3 knuckleheads that know nothing about science.
Yeah.
What's the over under on how long it takes for it to be illegal in the United States?
What?
Dude, these things take time. Like if
me, and Strazza are 3 knuckleheads that know nothing about science, right?
Okay.
Yeah.
What are we setting the over under on how long it takes to be illegal in the United States?
Oh, illegal. I think it was illegal. I was confused.
It took years for them to get certain opiates that were terrible.
Yeah, man.
Years.
Decade? I don't know. A decade or more?
5 years?
Wow, a decade or more.
5 years.
5 years. I'll take the under.
5 years.
If it's too good to be true, it probably is.
1 year? Come on, Rachel. This thing is not going to be illegal in 1 year.
I know, but Rachel knows more about science than the 3 of us combined, so I'll defer to her than us.
That would be wild. That'd be wild. Oh,
I'll take the under on 5 years.
All right.
I'll set it. I'll set it at 3 for the push.
Oh, Jerry says over on the 5. Okay, all right.
Just to be clear, the things we're saying about this drug, to be fair, are pure speculation. We know nothing. We're not the people to talk. It's more so of we've seen this story before. When something comes out and it could cure everything, and it's everything everybody's talking about constantly, and Walmart's even talking about it. It's usually
Mike's not wrong. It'll be illegal as soon as the health insurers are forced to cover prescriptions. That's probably true.
Hey-o.
That's a great way to look at it.
I'm bringing Kimmy on.
Do it. Kimmy.
Hi.
What is happening?
So, wait, did you go to Chicago already?
I did go to Chicago. It was lovely. It was a lovely time there. Do you like Chicago?
Yes. I mean, I went many years ago, long time ago, like when I used to work in the institutional side.
I was going to say, when you lived in New York, you weren't in Chicago often?
I went a few times. I've been there. It's a great city.
It is a great city. Great time. You know, it's just a different conversations. Like I said, you're at a bar, you're in line for the bathroom. In New York, you hear the bros talking about IPOs and stocks and this. You're in Chicago, the same conversations are about futures and options. The people are bigger. This time was no different. Remember, Spencer, we were talking about that? You should have seen the size of these guys. These guys were humongous.
Well, that's why I said you go to Chicago, everyone's like 6 feet and above. It's like you walk in New York, everyone's like 6 feet and below.
That's right. The stock bros in Chicago are much larger. It's true.
Yeah, they're big guys. And what's it called? Yeah. So what do you guys? I heard you guys talk about fundamentals. Why are there fundamentals on our charts?
That's what I said. The audience agrees that it's stupid. We don't need to know.
They're technicians. There's no fundamentals.
Thank you.
The audience does not agree it's stupid. Actually,
I read the comments. They think it's pretty stupid.
58% say yes, they want to see the EPS and revenue numbers on the earnings charts when there's an earnings report. They want to see
like a small sample size. Small sample size.
Smaller than the 2 comments you saw in the chat.
That's right. That's right.
Yeah, that's right. Anyway, all right. Kimmy, yesterday.
What are you thinking? New all-time highs before the end of the year?
For what? The market?
S&Ps.
No, I hope not.
Why not? Why do you hope not?
No, I just think no. I kind of said that I think we've seen the highs, but I'll follow price. If we break above, then great. I don't know what that sell-off was yesterday, but boy, was it nasty. I mean, nasty. Look at the IWMs. I mean, terrible. I mean, they were breaking down. I was like, whoa. I mean, it just didn't look good. We're gapping up this morning, I guess, because of bank earnings. We were at 430.
Futures were up before any earnings, right?
No, not really. They were flat.
No.
They were just at 433. Then you had some.
You're right.
Bank earnings, and then I don't know. You have Dollar General gapping up. I know UNH did well. That was in my morning note. I don't know why Dollar General's gapping up, but that one's gapping up too. We'll see what goes on today. It's Friday the 13th.
Oh, we didn't even mention that. Happy Friday the 13th, everyone. Yeah.
It is Friday the 13th, so we'll see. We'll see what goes on today.
Kimmy, I really like this United Health. Can you? I'm gonna throw it up so people can see the zoomed out chart here on slide 1. But can you tell me what you're seeing here?
Oh, well, UNH has obviously done very well. I mean, it's had a spectacular move off the low. I'm just looking at it. I'm going to monitor it. I really don't like to trade stocks the day of earnings, typically, but I'm going to look to see more if it has a pull in today.
It reported this morning.
Where it was up before at 435, then it pulled back in, then it was back up 432. I don't know where it's indicating right now. I have to say.
We're at
Spencer, throw it up.
533 right now.
Throw it up.
Yeah, so I'm going to see how it hangs on to if it holds, how it holds the. Was it 4?
Well, this thing's done nothing for 2 years, and when you zoom out, like when you really zoom out, this is one of the most impressive uptrends of any stock on the planet. To be clear. And then I think something that people forget, this company alone represents 10% of the Dow Jones Industrial Average. Fun fact.
Wow.
And the Dow Jones Industrial Average is the world's most important stock market index. And this is the most important stock in the world's most important stock market index.
Mm-hmm.
Here, throw up the new slide 1 so you could really see this thing going back. Look at this guy. Can't even see the y-axis because it's such a beast.
JC, you missed yesterday. I put Liberty on the show.
Oh yeah.
Did you?
I did.
How is she doing?
She's doing all right. She's almost her birthday soon. She's going to be 15.
Wow.
I know.
That's crazy.
Oh, crazy. Big dog.
When you and I met and became friends, she was just a little pup.
15 years ago.
So just an FYI, healthcare is the largest component of the Dow Jones Industrial Average, representing almost 21%. United Healthcare coming in at 10%. The second largest component of the Dow is Goldman Sachs at just over 6%, and then Microsoft at 6%, then Home Depot, then Caterpillar. But United Health, by far and away, largest component of the Dow Jones Industrial Average. Healthcare, by the way, people are like, "Oh, the Dow sucks. I'm an S&P person."
Well, of course it is. It's a $500 stock.
Yeah, fine. But what I'm saying is, let's say you're one of these the Dow doesn't matter people, which those people are just bad at math. The S&P 500's second largest component is healthcare. So whichever index you're looking at, healthcare is a very big deal.
Right.
But the first is way up here. The second is like way down there.
What, in the S&P?
Yeah.
No.
There's a bit of a gap, is what I'm saying.
No, definitely not.
No?
Because you're saying technology is 27%. Yes, fine, fair.
Yeah.
Fine.
All right. Yesterday, this is interesting. Kimmy shorted Palo Alto, which has been ripping, for a profit, I might add. Shorted Eli Lilly for a profit, as well. Shorted Meta for a profit.
All the best stocks.
Yeah, right. I love it.
But that's not surprising though, because how many times have we
talked
about
Adobe?
This?
Short Adobe for a profit, yeah.
Kimmy's buying dips on the biggest piece of crap, right? Looking for a mean reversion, and she's fading the strength, looking for that mean reversion, and she's very good at it. So it's one of the reasons I like Kimmy's product, because it's very complementary to a lot of the other things that we're doing. Most people, for that matter.
I don't know if it's complimentary. Mine's a little crazy, right?
No, but complimentary in terms of like very different. How many people are shorting Adobe, Meta, right? Eli Lilly? People are shorting these things.
I felt bad. Adobe kept going. I was like, I should have waited. And people in the room, I was like, guys, if you have to stop out, I'm staying with it.
We're long Adobe, but we have June calls.
Adobe's an amazing company, but if I want to trade and capture a move, I'm going to. That doesn't mean it's an amazing company. It's been well. It can continue to go higher. There's nothing, It
probably will. Right. That's not the point. What does that have to do with today?
We've kept Kimmy too long. She's got to go trade. Kimmy, go get him. If you want to join her room, get her trades. Get Kimmy's trades as she's calling them out live in her trading room. The link to do that is in the description. I'll throw the. I haven't done the QR code up for a while, so if you want to join Kimmy's room, there's a QR code to join as well. And she's there every day trading, every single day. Literally doesn't take a day off and has winners.
She really doesn't.
Usually. Yeah. So, all right. We got a lot of news I want to discuss. Some after hours and pre-market headlines causing some movement. I had a funny tweet yesterday. Wavy tweeting at me. Shout out to Wavy. I don't know if he's in the chat right now. I didn't even see this headline until Wavy tweeted at me because he's been wanting to. He's been talking about Dollar General for a while, and DG ripped after hours yesterday. Why? Because they brought back their old CEO. Their old CEO who's stepped down. He retired in last November. So a year ago, last November, he was CEO for 7 years, and he retired in November. And he's sitting at home and he's watching the stock, and he's thinking, "This sucks. I got to come back." And so he's back. His name is Todd Vassos is his name. He's now back. He was still on the board, but now he's back in the driver's seat as CEO.
Can you throw up the chart? I just circled where he left as CEO.
Why are these?
Yeah. It's pretty
what
funny.
are these guys thinking? We keep seeing this, and we were talking about it yesterday.
I was wondering that too, honestly.
What company was that yesterday? If you have a good life, you're retired. This is clearly a disaster that you're walking back into. Why?
Well, first of all, he was probably bored. First of all,
Yeah.
Second of all, he's probably like on the phone with executives like all the time, wondering what the hell they're doing. And it's like, excuse me, can you please remove your head out of your ass and stop losing me money? Because he probably still owns a ton.
His stock is up.
Net worth.
The stock is up 10%. The stock is up 10% this morning. Is this guy like the savior of retail? Like,
well, it's 10% is nothing after it got cut in half.
Yeah, but I'm saying
it's down 65, 70% in like 9 months. So what's 10%?
Yeah.
Nothing.
Yeah.
10% is literally nothing.
No, it's still a big move for just a CEO coming back. That's a pretty big move for.
It's not a pretty big move, Spencer. It's where it was 2 weeks ago.
I know, but the amplitude of the move, yeah, compared to the all-time issue, that hard, sure. But if you just look at just what the headline and what that's worth, right? Is that worth 10%? This guy coming back? I don't know. It's a big move.
This thing got smoked, that headline. Man.
So
shrinkage are these one of the shrinkage people? Too cold?
I don't know. But anyway, yeah, that circle is where he left. He left at the all-time highs, and he's sitting at home and he's watching his stock drop, and he's thinking, enough of this. So he's back. Okay, so that was fun.
How old do you think he is? This guy?
I don't know how old he is. Like, maybe I can Google it. I'm sure Google knows all. ChatGPT. He is
65.
Are you saying that, or are you guessing?
I'm guessing.
I don't know. He didn't show up when I. Weird. Anyway, I don't care. Okay. What else did I have here? He's in his early 60s. Yeah. Okay. So, moving on. Dollar General. Oh man, you want to see a stock getting crushed. Sava, SAVA. We talked about this one yesterday because it has a high short interest. Science.org they broke some news yesterday that Cassava Sciences, they've had this Alzheimer's drug, right? There's been some conflicting information about whether the trials were legitimate or not. But in any case,
it's a hot stock, it's a promoted stock, it's a paid research name.
Maybe, yeah, all those things.
Where can we get a list of these paid research names?
Hold on.
People do that.
In any case, so Science.org broke this news yesterday after the bell. So an investigation by the City University of New York, they have accused a neuroscientist who collaborated on this study with Cassava. They accused him of scientific misconduct involving 20 research papers, many of which provided support for Cassava's drugs trials. So one of the guys involved with this trial was accused of misconduct, and Sava got absolutely hammered after the close yesterday, down like 50%. It's bounced a little bit this morning, but just wrecked. So this stock has now gone from 146 a year and a half ago to 12 this morning. So train wreck there. And the last headline that I have is a reason why every time you guys talk about China, I just sort of see myself out of the conversation, because JD.com down this morning. There's a rumor that their chairman was arrested. I don't even know if that's true. It doesn't even matter if it's true. Okay.
Doesn't matter.
JD is down.
Why not even the chairman? He's just some guy that hangs out there.
Doesn't matter. JD was down. It's down 5% this morning. Okay. So this is why I hate investing in China. This can happen. You can wake up one day through no fault of your own, and some guy may or may not, or does or does not get arrested, and your stock is down, right? Or the government just decides to, kneecap the tech industry because they're communists, and it's a fake market over there. So this is why.
So I know, but honestly, Spencer, your recency bias is oozing out of you. There's a time and a place for everything. Just because you weren't trading when China was a dominant feature in this market, and you've just been around, you've just been around when China sucks, but it wasn't always like that. And I have a funny feeling it's not always going to be like that.
Yeah, China didn't suck.
China sucked your entire career, Spencer. Love you.
No, I mean,
pull up that FXI and tell me that
20. I'm looking at KWAB. 2017 was pretty good. I rode that wave.
2017 was good for everything.
20. Okay, so
these are high beta names, and they make for great trading vehicles.
They're high beta names that don't necessarily trade well when high beta names are trading well.
They have almost no correlation to the broader market a lot of times, which is crazy. Probably, I would say the lowest correlation to the broader market than any other country, China, because it will literally, you'll see it move in opposite directions at times.
Yeah, that's probably right.
For extended periods, also.
Yeah.
And another thing too is, I know the headline is he was arrested. There's a the lines are
no. He maybe was arrested. That's the headline.
The headlines will be arrested, but a lot of times they just like kidnap these people. But that's what it really is. They're like taken.
Why do you want a piece of this? This is what I'm saying.
Listen, this is one of the biggest growth stories around the world, and it's always been that way. So, and that's the thing. Any of these countries with like these mega growth stories, India, littered with issues, different issues, but big issues nonetheless. Vietnam, all of these places, and that's why they are viewed as such high reward investments, because there are big risks that come with it. And they're not for everybody. And I don't think you're crazy to not want these stocks in your portfolio over the long term.
Of all the things to do with your money, we all only have so much capital. Of all the things to do, of all the countries in all the world, this is the one. Yeah,
I would very much agree with that sentiment. Yeah, there's so much other good stuff you could buy.
Yeah,
there are some, like you said, unforeseen risks. With
I think you guys are just being a little way too negative, Nancy. Just because there's a ton of scams in China. So what? There's opportunity there, man.
Yeah, there's opportunity.
You hear what I said?
In Luck and Coffee and talent education. There's opportunity.
You're not going to have like a high potential reward investment without high risk. That's all it is, right? So it's not for everybody. It's very different than buying U.S. mega caps in that way.
Right.
Yes.
Not JP Morgan.
It's not JP Morgan.
That's right.
It is not.
Hey, guys,
you can't just avoid a whole country because you don't like the way it's traded over the last decade and they lie a lot.
Listen, I'm so
yes, actually.
Actually, I can. I do. No.
Yes. Yeah. I don't know. They're communists. It's not even an insult. It's just a fact. So. Okay. 9:35. What's up, Steve?
But can you just not invest in any communist country?
Isn't that what
there's a lot of communist countries.
Isn't that what Perth is doing?
Yes.
Yes, it is.
Perth Toll. What they're doing over at the Freedom Funds is super cool. Yes. So they're Xing out they're creating the emerging market indexes and other world indexes, and then they're removing state-owned, state-controlled, communist, socialist, all sorts of different.
Well, just
Strazza
generally
very much like that conversation we had with Perth. In fact, you should get her on the show.
Okay, I can do that.
Yeah.
Right, Strazza?
Yeah, totally, 100%.
Yeah. Okay.
And this is a theme that I can very much get behind in terms of like factor investing, right? We come on here and we probably say mostly negative things about factor investing a lot of times because
factor investing. I haven't heard about that in a while.
like things like ESG, total scams. There's a lot of scams out there to do with factor investing. This is not one of them. I think this makes a ton of sense. And I'm all for it when it's an intuitive idea for like a new index or fund. And that's what they're doing over there.
Have not heard about factor investing in.
Yeah, FRDM, Rachel, thank you, is the ticker that we're talking about. Guys, we have an anniversary here this week. Did you see my comment in the private chat?
When I told Maria that we were in a bull market.
Oh, yeah. We talked about this yesterday.
But why shouldn't we play the video?
Yeah, okay.
You guys didn't make another one of these obnoxious videos, did you?
No,
it's the
we didn't.
1-year anniversary of the October 13th bottom or October 12th on a closing basis. Not a big deal. Is that not a big deal? Is that not something we should celebrate? And it's Friday.
I don't think it matters.
Who's partying tonight?
The market had already bottomed. The market bottomed months earlier.
Whatever.
It just took forever for the indexes. The market bottomed in
Yeah,
June.
but that's what most people see, though. So,
okay, but most people are ignorant to the way the market actually works.
Yeah, but
is that wrong?
But we still want to acknowledge the things.
But do you think the 1-year anniversary of that matters, or we're just having fun with it?
We're having fun.
Yeah. Doesn't actually matter.
Hey, can you throw up chart 3, Fonz?
Hold on. Is there a video or no video?
No, there's no video. I don't know what he's talking about.
Can we throw up slide 1 because we're getting some messages from the chat? Go ahead.
Slide 1.
What?
Oh, no crypto Friday. I was going to make some crypto.
No, I was going to say we're doing that now.
Oh.
We got some charts. What
the hell was this?
This is Indian travel company. What? Why is that funny?
This is India. This is Indian.
Yeah, Indians Indians don't travel. I don't know. There's a zillion of them. Somebody out there's traveling.
Yeah, there's also like a zillion travel companies. I thought, but
how many of them look like this?
I don't know. I don't know what any of them look like.
That's right. So $5 billion Indian travel company. Right?
All right.
Making new all-time highs? No? This is not. Are you not entertained?
How does that compare to just broad India though?
Visually, this chart does not appeal to me, even though it's a breakout.
I was gonna say, you don't like this decade-plus long base?
Doesn't it just look like? What's wrong with this chart? Looks like sloppy. Is it the big spindles that are throwing me off?
It's the big spindles at the end of all the months, right? But I'm just pointing it out. I don't own it. I'm probably not buying it today. I'm just saying. Somebody mentioned it in the chat. I've had it on my radar as well. I want to just present it to the audience, adding value here. No big deal.
You know what else it is? I have no context. This is just base. Because that was I know that's all the price memo that we have. It must have IPO'd back then 2010.
Oh, Indian consumer discretionary. It's where you got to be.
No. But I like to see up into basing, then more up, right? This is just base. I got nothing on the left-hand side here. No preceding uptrend.
What about the triple over the last few years? Is that not enough for you?
I mean, Nvidia's up 10x?
Oh, so we're just going to compare every stock to Nvidia now?
I was actually doing that before when Kenny was on here talking about Rambus. I was just when somebody talks about a great stock, I just benchmark it against Nvidia and look at how bad it looks.
That's like going to every city in the world, be like, well, it's not New York. It's like, no, it's not New York, but it's still great. Like Chicago's not New York, but that doesn't mean Chicago's not cool, you know?
Mm-hmm.
It's the same thing.
So wait, this is Chicago?
This is Chicago.
No.
Make my trip? No?
No.
Okay.
Rambus. No.
Rambus is Chicago.
Rambus.
Yeah, Rambus is Chicago. I know.
This is close to New York, but not.
I think Rambus is like Dallas or something. There's got to be something better than Rambus. There's other semis. AMD might be Chicago.
Is Make My Trip Des Moines or something?
Make My Trip is a small consumer discretionary stock in India. I don't think that is one of the world's greatest cities.
Fort Wayne.
Just an opportunity.
Fort Wayne.
Oh, good glory. Good glory. Can we do a little crypto?
Can I just talk about my chart first?
Yes.
Yeah.
Chart 3. I don't get a Strazza spotlight. No love.
I'm doing it, but
it was the Strazza show while JC was in Chicago. What more do you want?
We were doing Strazza Spotlight for an hour and a half this week.
Strazza Spotlight. Let's do it.
Is that why?
That really gets me pumped up. That's exactly what I want to hear at 9:42 in the morning. All right.
Way too much Strazza for me.
So, 1 year anniversary of the index bottom is actually today on an intraday basis, right? So I'll bring you back to October 13th. Unlike yesterday, which was September CPI day, that fell on the 13th last year, right? And that's what sparked this bullish engulfing over here on the left-hand side of the chart that's circled in yellow. Talked about that a lot late last year after it happened, right? It ended up being the ultimate low over the cycle, and we haven't seen candlesticks pretty much across the board that look that bullish since Friday. Right? I know we've talked about it a lot, but now we have to come in and talk about the follow-through. Monday, Tuesday, Wednesday, bullish follow-through. You see it here back above a key level. This price action, despite the little sell-off yesterday, and regardless of what happens today and even early next week, we got the bullish candle. We got the follow-through. These patterns are complete, and they have failed for now. So that's where we are, and I think the August highs from last year remain the line in the sand for the S&P. And JC is going to talk about the dollar right now.
Am I?
I figured.
Didn't we already do that?
Well, so we have an interesting situation, right? Because we're talking about the dollar and we're saying, listen, it's holding where it needs to. This is bearish. It's above 105.50. This base is complete. Dollar's probably going higher. But then we're looking at this S&P 500. We're saying ultimately the same thing. Hey, look, this base is complete. We're above those August highs. It looks like it's going higher.
It ain't going to be both. It ain't going to be both.
And that's my point. At the same time, we're saying it can't be both. Pick one, man. Pick one. What's it going to be? Weigh the evidence, right?
I think I'll tell you what I think. I think the dollar breaks 105, it gets slammed, and we rip in stocks until the end of the year. I think that's what happens.
Well said.
But what I think is going to happen doesn't matter, just to be clear, right? I think that's what happens. Now, let's see it.
Yeah, fine, great. But at the same time, you're not just guessing, right? You're thinking about credit spreads and the discretionary staples ratio and a million other things.
Yes.
In the back of your mind, right?
That's right. So I'm reverse engineering what the dollar needs to do. Right.
He's weighing the evidence.
We do that. We do that around here.
No,
that's
but
right.
it's important, and it's the hardest part about what we do for a living. We could sit back here and say, I look at 5,000 charts a day. Great. But if you don't know what to do with them and how to organize the information in your brain, then looking at 5,000 charts actually makes things more complicated, right? I think over the years, JC, I probably look at fewer charts now than I did at my peak. Like there was a time there when I was probably looking at too many charts. I think you learn through experience over the years that this one's probably the same as that one, or these ones are all telling the same story.
You know which ones to focus on. And then when you're like, why is cybersecurity doing this? Then you go into the Slack and you're like, hey guys, cybersecurity, give me all the stocks, you know, and then you're going to dive into cybersecurity. You're not going to be looking at Indian consumer discretionary stocks.
You know why cyber's doing this? I got one for you. Throw up chart 4. Cyber is communications. Think about it. Internet is communications.
I thought it was software, one of the most important indexes in the world.
Internet is communications. Cyber kind of toes the line between cloud, which is software, and a lot of what they're doing is on the internet or on the web, right? Cyber is communications. Again, let's not overthink these categorizations and classifications by the S&P GICS, but communication stocks are hot. Cyber is one of the hottest groups in that space. And if you go to the next chart, oh boy, Palo Alto.
Yeah.
You're not going to find many better looking charts out here today. Clean, actionable, new all-time highs on relative terms, also breaking out of a monster base versus the NASDAQ 100. I have it benchmarked against the S&P in the lower pane here. But if you chart against the triple Qs, monster base breakout looks like it's about to experience even more outperformance. It's not easy to outperform the NASDAQ either.
Yeah, I'm going to take the other side of that, Strazza.
Go for it. You won't short this stock. You sound insane.
No. Nobody's shorting anything. I am talking specifically. Go to slide 1. I'm talking about specifically about your comment how cybersecurity is a communication stock. Hold on. Let's just go to the math for those of us who are into that sort of thing. I I don't know. I'm going to go with looks like software.
Okay, do it with communications.
You took the words right out of my mouth. Now, if you switch software with communications, it looks the same. So are you saying software is communications?
The bigger point is this. A lot of what's in communications is tech. That's why it used to be in tech. And a lot of what's in tech, you could argue, is communications. Tech and communications are both tech, right?
Yeah. And what is in tech these days, though?
And when I come on here and say tech,
banks.
We're talking about Meta. We're talking about Netflix. We're talking about Google. Those are obviously tech companies. So it's just not something to overthink.
Yeah, it's true. All right, let's do a little crypto before recess.
Crypto bump. Bitcoin still at the did like Bitcoin get delisted? Is anybody even trading this anymore?
Remember when Bitcoin used to be a volatile asset and bonds and utilities were safe havens? Remember those days?
Man, you know, I couldn't make any money trading Bitcoin since it doesn't move. I've moved all my money to a Treasury Direct account.
Can you just throw up slide 18? So holding that 25,000 level, very impressive to me. You know, in a range, right? In a range, go to slide 19, in a range, but the fact that it held that 25, step one. Step two is now take out those highs from the summer. Until it does that, there's really nothing to talk about, right?
And if you flip back to the last one, I like the way Louis or Fonz drew this up, right? With the VWAP, back to the last one. With the VWAP from those summer highs, because we've been dancing right between 25 and 30 for a long time now. If you're looking for some sort of signpost in that range to tell you if we're headed to the upper bounds or lower bounds, it's that VWAP.
Yeah, totally. No question, for sure. I got a good chart here, slide 21. So speaking of VWAP, we're looking at the realized price. So essentially an anchored VWAP for Bitcoin, but with different types of market participants, which I think is interesting. We don't have this kind of data in the stock market, but when you have all the on-chain analytics, you do. And what we know about bull markets in general, Bitcoin or otherwise, is that in strong bull markets, people that own those assets are making money, right? In bull markets, people that own those assets are making money. If it's a bubble, the people who've owned those assets are making a lot of money, an enormous amount of money, right? Can we agree with that?
Yeah.
Okay, so when you're looking at short-term versus long-term holders of Bitcoin, 155 days is the cutoff. Over 155 is long-term, before 155 is short-term. So you can see here the short-term realized price is essentially where we are right now. It's the anchored VWAP off the highs. It's right around the same price. But understand that the long-term holders of Bitcoin are profitable. They are making money. So that's step one, right? If the short-term holders are also making money, one would argue that is momentum and strong uptrends. Am I wrong?
I mean, it really looks as though this, you know, the short-term realized price has acted as support a couple times already this year.
Yeah. No,
it does act like.
So wait, is the point that you're making, is it that Bitcoin's relative calmness now is a good thing?
I don't necessarily think it's a good thing or a bad thing. It's really stuck above support and below resistance. And the volatility is at levels that has never been seen before. We're just at ridiculously low levels. So people just like forgot about it because people just got used to thinking that Bitcoin was a volatile asset. And here we are in an environment where Bitcoin is the least volatile asset, and bonds and utilities are and real estate are real volatile assets. And it's just hilarious. Getting back to your point about never trading China, there's a time and a place for everything. Even gold. One day gold's not going to suck.
Yeah. You would think Bitcoin would be performing better. We sit here and say, hey, it's just another tech subsector.
Maybe it's not. Maybe it's not.
But if that's the case, then it's the weakest one out there.
It was in a falling rate environment.
Yeah. Right.
So maybe like inflationary, deflationary assets behave differently. Maybe this is like that.
And I think it's a good lesson for us and everyone too, because we have 10 years of history to study this. So we're still learning what these relationships are.
Yeah.
And I think we've remained like steadily open-minded in using intermarket analysis and on-chain analytics over the years, just saying, we don't know. For now, this is the relationship, but we don't know, right? We don't have enough history to really study.
For sure.
Um,
So that's what I got on Bitcoin. If you want to hit a little recess.
Well, there's another
No,
anniversary.
hold on.
Yeah.
Yeah, no, go ahead.
There's another anniversary coming up as we're talking about crypto here. Have you guys been paying attention to the SBF trial at all?
Yeah.
Who cares about the trial? Anybody actually care about that?
Some good
I don't keep up with it every day, but I've been keeping up a little bit here and there.
A bunch of criminals that would have orgies and stuff in the Bahamas. Like, who cares?
You think that was true? Yeah, and it's all so strange. Some great memes on Twitter and Instagram about it. Everybody turned on him.
Well, the thing is, like, what I'm looking for is
turned on who? Fat Fred Savage?
Yeah. There hasn't been like there's been some new information, which is what I'm after is the new stuff. I don't need a rehashing of what happened last year. You know, we all know what happened last year. I'm just the anniversary of that was not now.
No, it's in November. Oh, the FTX blow up.
It was my wedding weekend.
November 10th, 9th.
It was like a couple days before that. It was like the 6th.
So yeah. Ellison will get off. It's starting to look that way. She's doing a really good job of sounding really, really dumb, like she knew nothing and was following orders. So, who knows?
Rachel, I'd be curious to get your opinion on the new Michael Lewis book. I don't think I'm going to read it. He's getting a lot of hate about it. I don't know. I haven't read the book, so I really can't speak on it. But I have my own opinions as to why people are mad at him. But I haven't read the book. So
what's this one about again?
Now he was embedded with Sam. He was with Sam doing a book on FTX on the rise, and then the whole thing blew up, and now it became a book about the rise and the fall. But
have we hit peak Michael Lewis yet?
No.
As good as some of his early books were.
I like Michael Lewis. He has always been unashamedly that he likes characters. That's what he likes. He likes good characters and good stories.
Shouldn't he like good characters? Doesn't he write books for a living?
Exactly. So people are mad at him because people are mad because Michael Lewis hasn't, painted SBF as like a bad guy. As if you need Michael Lewis.
I think people are mad because people just like to be mad. Like if you are mad at an author for writing a book, like there are other issues you have, right?
If you need Michael Lewis to tell you that Sam Bankman-Fried is not a good dude, then I don't know what to tell you. Okay, but
he writes books. Let him write books. What's the problem?
Yeah, are they fiction or nonfiction though?
No, his books are all. I think did he write one fiction book, and the rest were nonfiction.
But he's a storyteller.
But no, he's not like the other guy. Ben Mesrich, the guy who wrote the Facebook movie, the Facebook book, and then the book about GameStop. That guy's books are his books are like half fiction, half fact.
If you want to read a good Michael Lewis book, go read Liar's Poker. Get educated.
Oh yeah, it's great. It's a classic. But I like his books. I like him, and but I don't know if I need to read about this whole thing. And in any case, you guys want to do some recess? We got 5 minutes.
Do it.
All right. Is it going?
No.
It's not going? Oh, sorry. Thought it was.
I just want to say for my recess today that Chicago is not like this like super dangerous place that you really need to be careful. Obviously, there are bad neighborhoods and there are places that you don't want to go to, like any other city. I walked around a lot all over Chicago. Granted, I was in nicer areas near the river, all that stuff. I didn't feel unsafe at all. And it's not because like I'm a city kid and I've been in unsafe areas or whatever and I'm jaded. Like you could have been from anywhere and I think you would have felt safe. People walking around, friendly. I didn't see any issue. Like people were like, JC, take Uber from door to door. Like, I think people are being dramatic. I was pleasantly surprised by how safe and clean and friendly everything was. No issues at all. So I'll push back on that.
Are all of these metropolitan areas actually more dangerous these days, or is social media just nuts.
It depends on where you go. Like I was just in San Diego with you. That looked terrible. It was like a war zone downtown. Not unsafe, just shady characters walking around. Chicago, I didn't see any of that. Now, granted, and I was like in downtown Chicago, just like we were in downtown San Diego. So maybe, other places in Chicago, obviously, but that's always been the case. There have always been bad places in Chicago.
I've been hearing really since COVID too. This is more of a COVID thing. At least in New York City, I still have a lot of friends, and my brother tells me riding the subways is just different now, and not for everybody. He says it's like a mental health crisis in some of these transportation places in Manhattan these days.
I don't know if it was ever good. I ride the subway periodically. To me, it's the same. It was never good. It's
I'm
always
with
been
Spencer on this one. It's kind of the same.
It's always been a little bit. Always been a little bit. You don't know what you're gonna get.
You don't take the subway at night. You Ubered instead, or gypsy cabs, or whatever it was in the past.
As much as I would like to agree with this, it's not true. Homelessness is not just a West Coast thing.
Well, that's because you live in Key West, so
there's a lot here, but it's a problem in Manhattan. It's a problem in a lot of places on the East Coast. Probably, not as bad. It's literally like a crisis out in these West Coast cities. It seems like, but it's a problem everywhere.
All right, my recess, JC. I'm in need of some assistance here. We haven't talked wine on the show for a minute. I am going to Omakase tonight to celebrate the wife's birthday. It's BYOB.
Sick.
What wine do I bring?
No.
Well, you bring
sake.
sake.
You bring the wine. I know the answer.
I bring sake? Okay.
Hold on. Can I try? The Ginjo Junmai.
The what?
The Ginjo Junmai.
You want a Junmai Daiginjo, ideally. But it's BYOB. So talk to the liquor guy and get something that's not too floral. You don't want the odor, the scent, the aroma to overpower the fish. You want it to be a little bit subdued, because you're not there for the sake, you're there for the fish. So I think it's when you're pairing, you always want to understand what is this. Like if you were going sake tasting, then sake is the focus, and then the fish should be served to enhance the experience of the sake. In this case, you're going to omakase. So you don't want the sake to steal the show. You want the sake to complement the omakase.
Okay, so I'm writing down. What am I writing down?
Junmai Daiginjo.
I nailed it. Look at me.
Or you did not. Or you ask if they have like a good tokubetsu.
Tokubetsu.
If they ask the are you going to like a legit liquor store? You have like a good Asian community.
Yes, and I live in the Asian area, so there's a lot of
good. So go to a good spot. See if they have like an interesting tokubetsu. Tokubetsu.
Okay.
And if they don't have an interesting tokubetsu, which I doubt, tell them you're looking for a Junmai Daiginjo, that the aroma is not going to overpower the omakase.
I had sushi yesterday. I'm jealous, Spencer. Make sure you have some uni.
Junmai. I don't know what I'm going to have. It's whatever they give me.
I want to see how Spencer spells Junmai Daiginjo.
You want to see? I'll tell you how I spelled it if you want.
Do it.
How'd you spell it?
JUN space MAI space DI space GIN space JL.
You got it.
It's actually not bad, but they're all one word. You're too many spaces, but yeah, it's
not bad. Filtered sake is
but
gross.
The tokubetsu. Start with the tokubetsu. See if they have an interesting one. Because
thank you, stock market Mike. Thank you for spelling it out for me.
How about JC? What do you think about the unfiltered sake? I think it's just terrible. Speaking of too much flavor.
Maybe for dessert or something like that. There's, like I said, there's a time and a place for everything. Before we bounce, by the way, we had our harvest on Tuesday. We had 4.6 tons of Cabernet Sauvignon from Calistoga. Went well.
Wow.
Because when Kyle puts it on the truck, he's got to drive it to the to where they're gonna in St. Helena.
Yeah.
And like if it falls off the truck, it's over. You're screwed.
It's so cool. So Kyle said it all went well.
Yeah, harvest last year it's an acre and a quarter. Last year 2.8 tons.
Okay.
We got 4.6 because last year
it was bad.
Super hot, and it fried a lot of the fruit.
Wow, so almost double.
Almost double. In 21, we had 4.6 tons. So we pretty much had about the same as 21.
Cool.
And the 21s are tasting nice. You tried it.
I know.
We're going to pull them out of the barrel in January. Stock Market Mike, email us and we'll get you on the waiting list. I don't know if we're going to have enough available for the 21s to get you. There's some people ahead of you in line, but you know.
All right. That'll be a wrap for us here. Unfortunately, no what to pick today. Ian Cully is still sick. These kids, man.
It's back to school,
like
man. All these kids getting us sick. These kids are killing us, man.
Yeah. They're killing Ian. He's okay, but he's still trying to bounce back. So we'll be back with that next week. We'll be back with all of our shows next week, as always. If you're watching us on YouTube, you want to hit the like button, we'd appreciate that. You want to tell your friends about the show, share it on Twitter or Instagram or wherever. We'd always appreciate that as well. Check out our site, as always. Link is URL to the bottom of the screen there. And thanks to our guests. Thanks to Kenny, as always. Thanks to Kimmy. Thanks to everyone in the chat. Have a great weekend, and catch you guys later. Go make some money.
Friday, everybody.
Happy Friday.
Happy Friday, the 13th. Ooh.
I can't take no loss. I don't even know what it costs.